Iron ore demand is expected to crash. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of HeiseSays. Once again, with my stein of coffee in hand, I thought we'd have a look at this article from the Hellenic Shipping News Worldwide discussing projections for iron ore prices in 2020. Now, that's going to have a slight impact on Australia. And what we'll do is we'll just jump over here to the Observatory of Economic Complexity, and I'll just open up products in a new tab, and we'll have a look at iron ore, just so people understand Australia's position with regards to this. We'll just look at this, iron ore, because we're pretty big with regards to exports. If you can see here, Australia exports 52% of the world's iron ore. The price of iron ore has an effect on the Australian government surplus. Okay, before the bushfires and everything, we should have still been in surplus until it went down to $50 US a ton, depending on the Australian exchange rate. But 52% of the world's iron ore comes from Australia, and a big chunk of that, we'll just turn on here, operating mines. A big chunk of that, we'll turn off all the others. We'll just go here, iron ore. Comes from Western Australia, as you can see from the operating mines there. You know, Queensland's got one, South Australia's got two, New South Wales, a couple in Tasmania, but Western Australia is, you know, the iron ore state. It is definitely the iron ore state. So good on you, West Australians, you know. But just think about that. 52% of it is going from in the world is from Australia, and 63% of the import in the entire world is to China. So you can see why there is this is very important for every Australian to understand and to just realize. Because if we have this coronavirus just spreading and causing economic havoc in China, businesses are shutting down, demand for imports is crashing, demand for exports from China is going down. What do you think that might do to the Australian economy? What do you think it might do to the Australian economy? We'll just jump over here once again. You've got to just think about that perspective. $48.2 billion. That's the export value of iron ore from Australia. And as a comparison, I'll bring up the tourism industry's $60 billion. So it ain't a small chunk. And, well, the tourist industry is going to cop it too. So we're going to get it on a lot of fronts. Maybe, just maybe, we shouldn't have put all our eggs in one basket. But no, this is a black swan. You can't foresee economic disasters happening in countries. I guess, we had SARS. There was another virus outbreak that had economic impact. So probably you could have considered the chance of something like this happening again. But anyway, coronavirus is likely to impact steel, iron ore demand in 2020. Iron ore had a stellar 2019, reaching a 5-year high of $125 per tonne in July on the back of the Vale SA Brahmendo mining dam disaster and Cyclone Veronica, which struck Western Australia in March. Since then, the price has fallen to just over $78 per tonne in December and is currently trading around $90 per tonne in September. Singapore still well above prices this time last year. And we'll just jump over here. Let's go to the commodities on Trading Economics to see what it is going at the moment, or at least what Trading Economics is tracking. Iron ore 96.5, iron ore 62% Fe 92.9. Supply disruption was met with rising demand. China produced nearly 1 billion tons of steel in 2019 and consumed an estimated 875 million tons, spurred by stimulus-supported infrastructure spending and consumption from the construction market. But despite that, the markets are reacting cautiously to iron ore prices. The normal pattern, Reuters reports, is for prices to rally ahead of winter as steel mills build inventory for the start of the spring construction season. followed by a decline until a usually more modest summer pickup. So far, this Northern Hemisphere winter, 62% of iron ore has gained 22% from its November 11 low up to the close of $95.60 on Wednesday. This is about half of the 41% surge the steelmaking ingredient enjoyed last winter, when it went from $64 a ton in November 2018 to a peak of $90.70 in early February 2019. Well, there you have. There you go. Taken in the round, therefore, the market appears not as confident of rising demand this year as last, even before the coronavirus epidemic hit. So before this virus is taken into account, there was already reduced confidence being expressed in the market, everyone. With movement restrictions being extended almost daily, the fear is the outbreak could delay the return of workers to construction sites, in turn delaying iron ore and steel demand. One report suggests traders are taking up short positions to hedge the large physical purchases they have on the water due to arrive after the Lunar New Year holidays. These short positions are already chipping away at the iron ore price, the article reports. In Asia afternoon trade, SGX prompt month 62% FE finds futures fell by $3.70 per ton to $90.65 per ton, its lowest level this year. While the Dalian Commodity Exchange DCE May 62% iron ore futures fell 2.3% to 649.5 yuan per ton. There you go. So we're starting to see the market prepare for a potential decline in iron ore. Although China's output was picking up at the back end of last year, up 6.9% in December, as well, if you trust the Chinese figures, the fear is that strength will fizzle out after the New Year holidays if the spreading virus impacts industrial production and construction. With iron ore output on a more stable footing than in 2019 and consumption at risk from a spreading epidemic, the scene is set for a weakening of steel and iron ore prices in the spring. Automotive and manufacturing goods were already down last year. Vehicle sales were down 8.2% in 2019 from the prior year and were forecast to drop a further 2% before the outbreak of the coronavirus. Visiting car showrooms is not likely to be a high priority just at the moment, so New Year holiday sales will be down even more sharply than previously expected. Iron ore producers and their shareholders will be watching the spread of the virus and the authorities' reaction with concern. More than burst dams or poor weather, the epidemic has the potential to impact prices significantly in 2020. There you go, everyone. There you go. What do you think? Let's just jump back here to remind everyone. I mean, there you go. It's going to affect Australia, Brazil, and then you've got South Africa and Canada. We're the top 4 producers in the world, guys. If China's demand significantly decreases, that's going to hit the price. That's going to affect the Australian stock market. It's going to affect all the companies that are producing over here. That might even affect the budget of the Australian economy, everyone. What do you think, guys? Do you think this is going to spur perhaps a decrease in GDP? I mean, I'm not even going to bother bringing up wage growth, guys. Is that going to be possible? What about unemployment? ABS has said unemployment's gone down in December, where Roy Morgan is arguing it's going up. What do you think? What do you think? Let me know your thoughts and opinions in the comments below. I can't say that this is filling me with confidence for this year for the Australian economy. And probably, I'd argue it's another sign that we may be heading into a recession. Let me know what you think, guys. Thank you for watching. Like, share, and subscribe to the channel. If you're a fan and want to help a little bit extra, we have a Patreon where you can make a monthly donation. You can also support us by subscribing to the channel here or becoming a member of the channel here on YouTube, getting access to badges and emojis. We have affiliate links for Independent Reserve for you crypto traders, and Amazon and eBay for your consumer purchases. We have Pocket Squares at the HeiseSays website, and finally PayPal if you want to contribute that way. Take care, everyone. Thank you for watching, and I will see you in the next video. Bye for now.